Yeah, so we drill down on the basics of trading on this particular call. And what we have is an academy. We have our I Am Mastery Academy, and that academy is designed to take you through the ABCs of understanding the basic fundamentals of trading. All right, so you're going to learn the language. What is a pip? What is a candle? What are charts? All that other stuff. And then, of course, we have about 100+ different educators in about 8 different languages that's going to be able to show you live as far as how they're trading. We're going to show just a snippet of it here, but you're going to get hours and hours and hours of that at your fingertips, right on your computer and on your cell phone. And then we have about 14 different tools. We call them virtual assistant type tools that's going to show you how to get into a trade, what you're going to trade exactly, what's your take profit so you can make money, what is your stop loss to protect you so that you don't lose money. Okay, so it's going to instruct you on all those things to help you so that a person that gets in today, they virtually can start trading in as little as 24 hours. Okay, so that's the questions that I get. Well, Shawn, how soon can I start trading? How soon can I make money? You can literally start trading as little as 24 hours, okay? But now if you want to understand, you know, we want you to understand the skill. This team, Team Wealth Builders, which I'm so happy that all these glorious people that are on make up our wonderful team. We kind of have some certain philosophies that go on. And my thing is, I don't really want people to depend on getting signals or people just telling you what to trade. I want you to learn the skill of trading. Okay, I want you to learn the skill of trading. And so you use the tools to help do the heavy lifting, but you're going to go ahead and we're going to work on those skills so that we can have $100,000 traders, $1 million traders, multi-million-dollar traders. And we're producing that on this team. And some of the people that is on the call with you right now are having great success in their broker accounts. And a lot of them have been only on this platform for maybe either a few months or under a year time frame. Okay, so it is very, very possible. Renee, I'm going to put you on the spot just a little bit since you got your new hairdo and stuff looking all fly over there. I want you to unmute and please recap the conversation you had with your daughter about trading, just so we can set the tone as far as how complicated this is with this whole trading space.
I put an app on my daughter's phone. It's just an app for her to, it's a Forex app, and you can just play the little games on there to kind of learn. And my daughter, I was just looking through her phone, checking things out, make sure she wasn't doing nothing she wasn't supposed to.
Now, how old is she? How old is she?
She's 9.
Okay, 9 years old.
I looked on her app on the phone. I said, "You've been playing?" She said, "Yeah, mommy, I was playing. I played for about an hour and a half." And I said, "Okay." I see you got some money. Yeah. While I was playing with my baby alive, I just let it run. I lost some money. I gained some money. I lost some money, and when I looked up, I had $46,000. I said, "Oh, okay." So it's just to watch her to do that and to be excited about learning to trade. It's exciting me. So, and then she came and she was like, "Well, let me show you how to do it on your phone." Wait a minute, baby. Don't mess with mama coins. That I know it's a demo, but don't mess with my stuff. Yeah. So, but she's excited about learning about trading. So I just told her, I said, as soon as mommy gets the concept of it, I'm going to teach you.
Awesome, man. Thank you so much for that, Renee. So guys, just some little points out there. We're talking about a 9-year-old that has the MetaTrader 4 on her phone, and she's in demo, and she just, she's making money. Okay, she's making money. She's doing the skill. Okay, it doesn't matter that it's live or not live. The point is, to her, it's real. And here's the thing. Here's the part I really want you guys to get is it's mental. It's up here, okay? 90% of what you're doing is up here. And so tell me, Renee, did she even care that she was losing the trade? Did she fall out? Did she huff and puff? Did she get mad and kick her little doll that she was watching because she lost money?
No, she didn't. She didn't get mad about it. She said, "I just let it ride."
Yeah, let it ride, right?
I just let it ride.
And now this chick makes $46,000 in her demo account. Okay, very good. That's it. It's just a game.
Yeah.
And so I want you guys to take something with that, is that most of us were beating our heads against the table. We getting mad. We huffing and puffing. We throwing oil on the computer. We speaking in tongues. We at the altar on Sunday, you know, please help my broker account, Lord. I'm just praying. And you know, kids out here at 9 years old are making money because they think it's a game. Okay. So what I want you to take from that is that, you know, get into a mental space and just understand that it first starts with practicing on your demo account so that you can get the skill and that you can work the patience out, so that when you see it in a pullback, you're not going to fall out. When you see it, you know, win, you can train your mind to say, hey, look, I'm used to this whole learning process. And now I'm able to go ahead and do the real thing. And now you can take those building blocks and get to 6, 7, 8, 9 figures in your trading account. Gina, man, Gina from the Bahamas, thank you for being on. We're so glad that you are on from the Bahamas. Thank you so much. So, all right, so tonight's class, guys, is we're gonna, you know, just reintroduce Fibonacci, the Fibonacci tool, okay? Now, for those of you who are new, those of you who just signed up, those of you who are under a month in the business, I don't want you to panic. I don't want you to get scared and say, oh my God, he's about to go way over our head, okay? I'm just gonna introduce a taste of it. And then what we're gonna do is we're gonna bring some basics in. Like we're gonna talk about support and resistance, okay? And we're gonna talk about trend lines, okay? So we're gonna introduce these very, very basic concepts. And I'm gonna really tell you that if you can get these 3 things, you can get a support, resistance, a trend line, then when you use Fibonacci, any other strategy that you use is going to work. Okay, you can use these basics. These are the very basic foundations of trading that will work. I don't care what strategy you use. You use the bounce back. You can use a teacup. You can use a gold cup. You could use the BYOB. You could use whatever, the Sharif, whatever strategy that you've learned. If you get this basic foundation straight, then the rest will come very easily for you. Okay. And so just to recap again for the new people, please get whoever invited you on the call, get with them after this call, get into the I Am Mastery Academy. Let's go ahead and as a team, we're going to rally around you and we're going to make sure that you're successful at trading because we want you to learn the proper basics. And that's why, guys, I tell you not to, you know, really jump out doing too many strategies at one time. I really start off with the harmonic scanner. And then we build from there, because if you can get the harmonic scanner and put in trades and win, then you can do whatever other strategy that you want to do. All right, so let's jump on into this. I'm first going to cover about support, resistance, and let's see, let me make sure I get it. Support, resistance, and trend lines. Okay, I want to cover that because that will make so much sense when we get into Fibonacci. All right, and so let's jump to this. All right, so I do have Fibonacci up because I was making sure my tool was working, everything was good, but we're not going to get into that quite yet. All right, I want to get into the basic foundational piece here. Excuse me. All right. All right, so this is a naked chart. Let me get on a 15-minute chart. We're in USD/JPY, which is active now. So I'm going to slow it down for our new folks. And so please forgive me, more experienced folks. But again, this is a recap. And sometimes, you know, going over the basics really does kind of help your trading game. Okay. All right. So, all right, let's start here. So for those of you who are new, I'm going to be speaking to the new people. Okay. The market moves in really 2 directions, but we say 3 directions, okay? It's going to move up, and we call it uptrend, all right? Let me put that in there, okay? So it's going to move up, okay? Whoops, let's see. Yep, the market's also going to move down. That's the second direction, okay? Ooh, and then it's going to go sideways. There you go. So three directions, okay? That's it. That's the basic foundation of what I really want you to know and understanding trading. Everybody's looking at, oh my God, look at stock prices. Look at this, look at that. It's really quite simple, actually, that the market moves in these 2 directions. And actually, when it's going horizontal like this straight across, guys, that's where the market is finding equilibrium. That's where it's balancing itself out. And basically what that means is there's a certain number of people that are putting in sell transactions and the same or around the same number of people putting in buy transactions. So people are just going, you know, one for one. It's kind of balancing it out. But what happens is something like the news, something like the coronavirus, something like, you know, just whatever the case may be. It could be a holiday. It could be, you know, some cataclysmic thing, or maybe it's just some great news. Okay, maybe the president comes out with something. Maybe the president of this country, maybe a peace treaty comes out. Whatever it is, it affects the pattern of the market. And when it comes out of equilibrium, we call this a breakout. It's going to break out either up or it's going to break downward. Okay. And guess what? This is where you make your money. This is where you make your money. Now, if you're trying to understand the concept of trading, what exactly, Shawn, are we trading? We're trading a weak currency against a stronger currency. So at any time of the day, the US dollar could be strong and the Japanese yen could be weak, or vice versa. Okay. And then in that transaction, you have people that are having an ask price. That means they're selling. Okay. They're selling it off. They say, ooh, I got this currency. I want to sell it to make a profit. And then there's people that say, ooh, this is a good price. I'm buying it. So that's a bid price. So you have an ask and a bid. And so that's why on your cell phones, you see when you're putting in a trade, you see that the red and blue line bouncing around with pricing. Well, that's because one person is putting in an ask price and the other person is putting in a bid. And so just remember that when there's a price that you believe that it's going to go to, that both of those prices need to cross that area. It needs to cross so that you can get the profit. All right. So, all right, Shawn. So what are we learning here? What I Am Master Academy is here to teach you is to understand the patterns of the market. That's simply it. We're here to just teach you how to read the market. Okay. No different is if you are a doctor that goes to school. You're there to learn the patterns of a person's health. You're learning their breathing. You're learning their heart rate. You're learning their pulse. You're learning all these things. You're looking at different clues. You're looking at, their fever, their temperature, all these things so that you can see the human patterns. If you're an attorney, guess what? You go to court and you do mock trials also that you can learn how people respond. How should you ask the question? How did that witness answer you? What is the body language? What is the jury saying? You're just learning patterns. Okay? If you're a mechanic, guess what? You'll learn to listen to diagnostics. You're going to learn to listen, look at a computer and you'll read the diagnostics of a vehicle. Okay, what's the pressure? What's the combustion level? What's the compression level? Okay, you got some of those mechanics who've been doing it for years. They can listen. Let me hear, what's your car sound like? Because I've listened to so many hundreds of cars, I can hear that, oh, that's your catalytic converter. Oh, I hear your pistons are rattling. Oh, you might be low on oil. Oh, it sounds like your engine is overheating. You see what I'm saying? So all these skills are built around learning patterns. And so here with trading, you're just going through the academy and you're watching other traders so that you can learn the patterns. And when you learn these patterns, you'll be able to successfully kind of deduce what the market may do. We don't predict, but what we do is we prepare ourselves with the human behavior. And here's the thing: if it doesn't go up, then what's it going to do? It's going to go down. If it doesn't go down, what's it going to do? It's going to go up. And so we kind of beat ourselves up as traders because we have in our mind a preconceived notion that it's supposed to go up because that's what I thought it's supposed to do. I predicted it, and that's it. And then all hell breaks loose because all of a sudden it reverses. And we freeze. Instead of just saying, you know what? Let me get out of the trade and just jump in the other direction. And let me just reassess what's going on. I wasn't correct on that one. Obviously, it's doing something else and it's going to another level. Let me determine where it's going so I can jump in and make a profit. So I just want to take the mystique away from the whole trading part, that's simply what it is. This is a chart of human behavior. And what we're going to do is the more that you put your eyes before it, the more that you study the market, you're going to become familiar with human behavior, just like a doctor does with a patient, just like a mechanic does with a car, just like a lawyer does with a juror. Okay? They're just going to learn with experience. All right? So market moves three ways: up, down, and sideways. All right? And so now, if it moves up, down, and sideways, the next question is, well, Shawn, how do we know where it's going? How do we know how far it's going to go? Well, that's where we use support and resistance, because everything has boundaries. Okay, let's blow this up a little bit. Well, all we want to do when we're trading is we want to find out, well, what's the boundaries? Let me switch this. Let's expand it. Let's reset this. All right. Okay. So, all right, I'm going to mark this chart up real quick. I'm going to keep it really, really simple. Okay. And then okay. Oops. All right. So these lines represent the boundaries in which we're trading. Okay. Everything around us has boundaries. When we're driving a car, we have the left boundary, right boundary. We have a center line. We know what our boundaries are. Okay. We're playing basketball, football. Guess what? We know where the boundaries are. What's out of bounds, what's in bounds. Everything has boundaries. And what you do is you play within those boundaries. By doing support and resistance, it's going to help you identify the boundaries in which you're playing in. That's all that is. Okay. We want to see, well, where in this pattern that we're studying, where could this pattern go? Okay. So what we do is we're looking for, and this is the question that people say, Shawn, how do I do this support and resistance thing? What you're looking for is a minimum of two points that touch around the same area. Okay, 2 points. If I were to tell you to take a ball, okay, and I say, I think Sharon, Miss Sharon, you're the newest one on the line. So if I say, Sharon, take this ball and throw it up in the air as high as you can, and I want you to do that about 5 times. So what you do, you take the ball and you do like a kid does. You throw it up in the air, and it goes about maybe 8 feet. Turn around, you throw it again. Goes about 8, maybe 8.5. Comes back. You throw it again. This time it's right under 8 feet. Throw it one more time. You're about 8 and maybe an inch or something. Okay. So in that example, the highest that ball has gotten is somewhere between maybe 7.25 to maybe 8.5. This is a zone area because you're throwing as hard as you can. That's the ceiling. That's as hard. That's the highest as you can go. So there's a pattern there. You see what I'm saying? And the more you throw that ball, it keeps going somewhere in that pattern. And so then that's how we can come up and tell you that, well, you know what, Sharon, you got a pretty good arm. You know, you're throwing 8.5 feet up in the air. That's pretty good. We know what your zone area is. Okay. So that's what we want to do. We want to identify in the market, well, where's the highest part that this price keeps touching and turning around? Just like that ball we throw up in the air. It keeps getting to a certain point and it just keeps coming back down somewhere in this area. So we identify that with the top line that we call our resistance. So think of it like the ceiling of your home. It's got resistance. Like you can't float up in the air. That's how I remember it. Like if there was no gravity, we would be floating in our house. Well, the ceiling will keep us from going. It's resisting us from going up. So that's it. And the support is the floor. That's where the price comes down. And in at least 2 different points, it's going to bounce off the floor. It goes up, comes down, and that's a second point. So as long as we have a minimum of 2 points, we have a possible floor. If we have 3 points, that's really a good floor. Okay? So we're looking for 2 to 3 points in which price, or the candle, which represents price, goes and it turns around in that area. okay? So now, once we identified the high point, the low point, now we know that we can trade anywhere in between this. Because what the market does is it bounces, just like that bouncing ball, it bounces from the top to the bottom, back to the top, to the bottom, to the top, to the bottom, and you make money because what is it doing? It's trending. It's going to trend. When it comes down from the top level to the bottom, it's trending down. When it comes to the bottom level and trends back up, we're in an uptrend. And remember I said the market moves in those directions. We only make money when it trends up or trends down. If you can identify where the market is going, well, now you have a plan to make a good trade. So let's look at this second part down here. All right. What happened is the market had closed, it reopened over the weekend. Okay. And then it started here on this bottom level. Excuse me. Started on the bottom level. And so it broke through the floor and it continued in a downtrend. So now we have this area. Well, I already marked this bottom area. Well, guess what? Now we have an idea of where the floor is, which we call our support. Think of that like support beams in your home, you know, to keep the floor steady. You have support beams. So now that's the lowest part where it's bounced a couple times down here. So now we've identified a high point and a low point. So now we play in between. That's our boundaries. So now once we come down here, look what happened. It bounced on the floor. It never broke to go lower. It just stayed on this floor. And then finally, what did it do? It was going horizontal. And what did I say? The market moves up, down, and what? Horizontally. It was horizontal down here. And now guess what? It's breaking back up. So now once we identify that, okay, can somebody tell me, are we in a downtrend or uptrend now?
Uptrend.
Uptrend. Thank you, Tia. We're in an uptrend. So once we identify, excuse me, that we're in an uptrend, we can get in. We can get in. So a lot of you are like, well, Shawn, where's my entry? So we're going to pinpoint that. And then I'm going to show you how Fibonacci works to help you understand that it's going in an up or down trend. Okay, that's what the Fibonacci tool is going to help you do. But first, we got to get this basic part right here, is that we identify that it's hit the floor like a ball. It bounced on the floor. It can't go any lower. It's not going any lower. And all of a sudden, it starts coming up. So now we can jump in and make money, because this is what you want. You want to trade from as low as you can to this floor and try to get in so that you could ride it as high to the ceiling. That's what you want to do. But it's not perfect. You're not going to catch it right there off the floor. There needs to be some confirmations. You need to have a checklist of some sort that's going to tell you, how do I know that now it's leaving the floor going to the ceiling? And how do I know that it's going from the ceiling coming down to the floor? Well, here's the beautiful part. That's what I Am Mastery Academy will teach you. It'll teach you your checklist. And we have a number of educators that uses their own checklist. And they make thousands and thousands and thousands of dollars a day using that checklist to find out what people are going to do. Okay. And so that's it there. So let's just take an example. So for those of you who are new, you know, again, I know this is probably over your head, but this is the very, very simplistic form of what trading is. But I'm going to show you how much money could you possibly make. Okay. So this is on an hour chart. So what that means is not that it takes an hour, you know, for it to be completed, but it means that every candle, and a candle is this green or red that you see, it takes 1 hour of people trading to make that candle. Kind of like if I had a candle for people shopping in Walmart, they would take, you know, people buying and returning goods within an hour. If they were returning more things than buying, then it would be red. If they were buying more things than they were returning, it would be green. Okay. So here, people are buying more than they're selling. So that means it's green. So it's going up. So now we would start here at the bottom. And to go from one level to another is approximately 291 pips. So depending on how much money you have in your account, you can determine that you can put a value to each point that it goes up, or each pip that goes up. So for instance, if you're making $1 per pip, you could virtually make $291 in just a matter of maybe a few hours, okay, from home on your cell phone. Well, guess what? Some people have a little bigger account. This could have been a $2,000 move. This could have been $2,900 for them. There are people that are making $2,900 right now because they're going from the bottom to the top right there, because they use their confirmations, they studied it, and they're going from this one level to the top level. Guess what? This could be $29,000 for somebody. This could be $290,000 for somebody. This could be $2 million for somebody. It all depends on how much you start off with. The goal is to take somewhere between $100 to $500 in your broker account, and over time, find these moves. Find it going up, and then find it going down. And from there, you're going to grow your account. You're going to look for these 100 pip moves, 200 pip moves, 60 pip moves, 30 pip moves, whatever it is. You're going to find that in the market just by having your support and resistance. Okay, just by outlining these levels, you're going to find that. And once you find it and you have your confirmation, you're going to make a whole tons of money. All right, we got several people on the line now that have had a killer weekend. Woohoo! Killer weekend. All right, trading. So now let's talk about the trend line. What is a trend line? The trend line merely tells you or helps you identify if it's going down or going up. That's it. And what we do is we're looking for 2 or 3 points, just like we do for support and resistance. It's no different. Just like we go across looking for 2 or 3 different points to touch, down here we're looking for 2 or 3 points to touch. So I kind of started here. I probably could have put it a little closer to here, but you know, I'm looking at the beginning point here, and my second point is down here. And then it ended because of this line right here. Okay, it stopped going in a downtrend because it started going what? Horizontal. So I think of it like the Titanic. It was on a course to where it was going south to South America. Okay, it came down to South America, went around the tip of South America, and now it's trying to turn direction. So now it's going on a straight path here, and now guess what? It went over the tip of South America and it's headed back up. So now it's heading north. Okay, the trend line kind of tells us what is the path that it was going. That's all. And you're just looking for 2 or 3 different points to let us know it's going there. Now, what we look for is if it breaks that trend line. Okay, I did a down part here for the trend line, and what happened is it came here, crossed this line, and went straight. So now I could do a trend line that's going up, you know, and then it'll head in an upward fashion. And so now what I'm looking for is 2 things. I'm looking for, one, to go to this area over here, close to this first yellow line. Now, here's what I want you to know. Remember, it's kind of like, let's say football, let's say basketball. Just because we know the boundaries is 291 pips doesn't mean that I have to ride it all the way from the very, very extreme bottom to the very extreme top. No, if you can catch 100, 150, 200 of that, that could be a $2,000 day for you. That could be a $20,000 day for you. You need some room, just like, you know, out of bounds. You need some boundaries. You need a zone area. So you want to give it a little room. So when I do my take profit, and take profit is merely the point that you pick, that when the candle gets there, it's going to hit, it's going to close, and it's going to deposit the money in your account automatically. When you want to set that a little distance away from your support or your resistance. And I like to be about maybe 10, 15 pips away. Okay, I like to give it room, maybe 20 pips. Just depends on what time frame. If I'm on a 15-minute chart, I'm usually about 5, 10 pips away. If I'm on an hour, 4 hour, I'm usually about maybe 20, 30 pips away. Because it doesn't mean just because we put a support resistance, that's exactly going to make it all the way there. And here's the thing. According to the confirmation that you learned, you're going to wait till when it gets here and then see if it's going to do 1 or 2 things. Because remember, what did I say? It's only going to do 1 of 2 things. It's either going to continue up, all right? It's either going to continue. It's going to break through this area, continue up, or it's just going to bounce off of here and come back down. Either way, you're not going to lose. Because let's say we made it up here, I get out right before it gets here and I wait. This is where patience comes in. I wait to see what the market is going to give me. Is it going to break through or is it going to turn? Once you determine through your confirmations what it's going to do, guess what? We're on another ride all again. Woo, boy. Now we jump in here. We already made $2,000. Look, guess what? Another 262 pips. You could jump in and have once it goes there, then tomorrow, or depending on when it breaks through, you could have another $2,000 day. You could have a $4,000 day today. Just from support, resistance, and a trend line. There's no indicators. I don't have RSI. I don't have stochastic. I don't have Bollinger Band. I don't have anything. All I'm doing is reading what the market is putting right before me. Too many of us are so reliant on these indicators like it's a make it or break it. No, if you learn this very, very basic and simplistic tool right here of just understanding structure of the market, the rest is just bells and whistles. The rest just tells you, when's the perfect time to get in. When I see this in my confirmation, then I know when to get in. No, all you need to do is see it break these levels. Once you see it break and you see another candle shooting up in that direction, guess what? You jump in and you ride it up even higher. If you see it bounce here, it goes green, 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 green. Then all of a sudden it goes red, red, maybe 2 red candles. That might be a clue. Hey, I can jump back in and ride this back down for another 200 pips. Or 15 or 20 or 30 or 50 or however many that you feel comfortable with. But at least you know the boundaries in which you're playing. And that is the goal of trading. You want to find out the boundaries that you're playing, and then you want the market conditions to come to you. Now, I'm not telling you this because I'm an expert trader. I'm telling you this because I've blown accounts. I've jumped in trades too early. I was too anxious. I tried to predict the market. So guess what, guys? All of this is just in my journey of being patient and learning that the market will pay you a lot if you're willing to be patient and learn to manage your risk. That's one thing I've talked about is I don't necessarily anymore am I considering myself a trader. Instead, I'm considering myself a risk manager. I'm just here to find out my boundaries to play in, and I'm going to manage my risk. I'm going to try to lose as little as possible and gain as much as possible. That's it. So let's talk about trend lines just a little bit more, and then I'll get into Fibonacci. And I'm gonna take a pause right here. I know I have new people on, and I don't want to go too far over anybody's head. But does anybody have any questions right now about support, resistance, and trend line? Anybody? Don't be shy. There's no dumb question, silly question. We're all learning. I'm still learning. Nope. Everybody's good. Oh, wow, I must be doing a great job then. Everybody's getting it.
You are.
Thank you, Quion. Thank you. Let me erase some of this. Okay, let me find another pair that's pretty good. Let's look at Euro odd. I think that can give me a good trend line somewhere. Don't like that. Don't like that. Let's look at Euro JPY. All right, they all looking the same. Doesn't matter. Trying to find some good trend lines here so I can really find, there we go. Okay, that looks kind of good. All right, so a trend line. I know, Renee, you had this question, so I want to make sure that you get that, okay? So.
Thank you.
Yes, ma'am, not a problem, not a problem. Where's my line? That's array, horizontal line. Okay.
Hey, Shawn, I have a quick question.
Yes, ma'am.
We were just looking at USD JPY, and now you have Euro JPY.
Yes.
I see that they're trending the same way. It was went down into that sell, consolidated, now turning up into the buy. Are these two correlating pairs?
Yes, they're pretty similar. Now you said Euro and what's the other one?
Well, you just had this one up. I mean, you have this one up, and then you just had UJ up.
So yeah, I mean, more so. Let me move this out the way. More so, EJ and GJ are a little bit more correlating, but yeah, most of the JPY pairs are going to move pretty similar. So there is somewhat of a correlation, but I like to say GJ moves the fastest. Then is EJ, Euro JPY, which moves kind of like, I always like to say they move like a husband and wife. When one moves left, the other one kind of moves right, but they kind of move together. UJ kind of moves faster on the US session or the New York session. So EJ and GJ move fast on the London session, and then UJ moves kind of fast on the New York session. Now it does move, of course, at this time, but not as fast as it does during the New York session. So I tend to trade UJ then. But if you like something slower and still get a lot of pips, UJ at this time is pretty good. Right around this 9 o'clock, this 9 o'clock to about 11 o'clock time frame is pretty good for those of you who get off of work and you kind of want to, you know, make some money and trade. So UJ is a great pair. I think somebody said Euro Odd is a pretty good pair to trade with. So hope that might answer it. So good. So what happened here, and I'll go with the, so again, we moved horizontal, okay, right here. Whoops. Too many little X's. All right, so stop all them little X's. Okay, so we had a horizontal line here. Let me move it down so it looks a little neater. All right, so we had consolidation, and consolidation or ranging just means that it bounced and is going straight, remember? And we're waiting for a breakout. We're waiting for it to either break up or break down. In this way, it moved up. And so we use a trend line, and I have a couple places that I'm gonna put to draw this trend line. So let me put an arrow because I like to use these illustrations. And that's why we use TradingView, guys, because it's easy to draw. Easy to draw on and give visuals, and I like to see visuals. Okay, so those are my two main spots that I can put, and then I'm kind of concentrating up here. Okay, so that's why I drew the trend line upward, because it started here, then it bounced here, okay, and then it crossed up here. Okay, so it gives me kind of just an imaginary line to look at, but here's the thing. We use it as almost as a support, because that's what it's doing. It's the bottom. It's touched there. It went up a little bit, bounced here again. So that's 2 points, came up again, came this third time. But on this third time, it broke through. And so we use this third time. Let me move that arrow. We use this third time to give us kind of a visual of saying, hey, this might be changing direction because it's not continuing up in the same trend. That's why we use a trend line. Okay, because we're setting up a wall here and out of bounds going at an angle. And once we see that it goes pretty farther past that, then we kind of know, look what happened. It went back into consolidation again. And that's just how the market moves, guys. It finds balance. Look at that. Came again. And then what? It went down. Oop, I can work that out. Went back in a downtrend. Okay, that's all the market does. It finds balance, gets out of balance, goes in an uptrend, goes to balance, gets back out of balance, comes in a downtrend. In all of these, you make money. Once you can determine what the market is giving you, that we know it's going to break out. Like, ooh, it's going to break out for a while. And here's a clue I learned just doing some studying. The longer that is in a consolidation like this, the longer it's going to be in a trend, up or down. So you want to see this. It's like something that's about to burst. When you see it consolidating, you like, ooh, baby, this thing's finna break out, and it's finna break out big. We just don't know which way it's going to go. And so what you do is you wait. You wait to see what it's going to do. Because right here, this kind of is our channel right here. Let me erase this. Well, that horizontal line looks good. So right here, this is our channel. In other words, it came on a downtrend and it got locked in right in this channel. And now we're waiting. We're waiting to see, is it going to break out of that channel? And it does. So this is where I would probably enter somewhere right here. Let me mark another arrow. I would get in somewhere here, okay, to go in my uptrend. See, boundaries. That's it. Because right here is a little boundaries. It touched up here, bounced once, came again, bounced up. So I have a channel right here that is locked in, and we know it's going to break out somewhere. We could have got faked out and think it's going to go here, but you kind of wait until it's significant. And so we wait, and boom, it came out significantly over this channel. And you don't have to get in there. You could have got on here, here, here. Either way, you get out when it's pretty evident. See, too many of us are like, what's the perfect entry, Shawn? I would need to get it. It doesn't matter because we got 200 and something pips to play with. Stop. That's what we mean being greedy. When I say don't be trying to focus on getting everything, because you're not going to catch everything. You're not going to catch what I tell people. You're not going to catch the first 20% of a trade. And you're not going to catch the last 20%. You're going to catch the 60% in the middle, or I'm sorry, let's say 20, 24. Yeah, you're going to catch the 60% in the middle. And that's good enough. That's good enough to make you a millionaire. You don't have to catch the whole 200 pips. Catch 150 of it. Okay? Even if you just caught it right here and went up here, and then when it pulled back, you got scared. Let me show you. Right here. Just if you got out and got scared, that still could have been $1,000 day right there. That could have been $1,240 right there. That could have been $124. That could have been $12,000. Even if you just ride it up and got scared and got out. Ooh, it's pulling back. I'm getting scared. Let me get out. Okay, not bad. If you stayed in and you were gutsy, that's about a $2,000 day. Okay. Does anybody have any questions about trend lines now? Renee, talk to me. Tell me if you get it or if you don't, or if I need to elaborate.
I am good. I'm good.
You're good?
Yes.
Okay. So remember, all we're looking for is for it to head up, and you're looking for at least a minimum of what? 2 to 3 points. 2 points is good. 3 is even better. And I want you to know that usually in threes, that's when things happen. If you got 3 touches, usually on that fourth, it's going to do something. Okay? It's going to do something. So just remember that part. That's one thing. If it touches in 2 spots, you'd be like, oh, it's finna do something. It's either going to break out of the trend on the third, or it's going to break out on the fourth. If it touches on the third, you know it's going to probably break out on the fourth. Okay? So does anybody have any questions about support, resistance, trend lines? Please ask. But again, this is all covered in the IM Academy. They have a complete section on support, resistance, and trend lines that goes in it, so you can study that. We have educators that just trade doing what I'm doing, and they call this naked trading.
So this is a 1 hour chart, it looks like?
It is.
So it looks like I counted about 12 candles. Is that right?
Uh-huh.
Okay, so I just want to point out that this was pretty much buying for the whole day.
Yeah, at least half the day, yeah.
Yeah, well, you know, half the day. I couldn't trade 24 hours in a day, Shawn.
Sure you can. Just put it in and let it ride. Yeah, wake up the next morning. All right.
Well, that is true.
Yeah, that's it. All right, so let's get to Fibonacci. All right. Let's get to fibs. Let's get to fibs. All right, this looks like a good little area to look at. Fibs.
Shawn, quick question for you.
Yes, Kendria.
So I know originally we were looking at data from February. Does it matter where you're looking on the chart? Because I see we're going down to kind of current time frame.
Yeah, I went backwards because I was looking for a distinct pattern that was pretty easy on the eyes. But always the market is right here. You're opposite from your reading where we go from right to left, you're going from left to right. And so your left, this right here, I'm sorry, left to right. We read left to right, but we're looking at the market from right to left.
Tracking.
Okay.
Understood.
There you go. So this is the most current price where we're at. You see this line come across at this very second that we're talking. This is where price is at 117.885. Okay. So that's where we're at. That's where, and so we go backwards from here. And so what we're doing is we're looking at history, because history, past history, repeats itself in trading. You know why it repeats itself? Because this market is moved by people, and people are habitual creatures. Is how it is. It's no more complicated than that. We eat the same things. We like the same things. We probably conduct our day the same way. So guess what? If we eat the same foods, we hang with the same people, we talk about the same things, we watch the same things, we whatever, we shampoo with the same shampoo, the same soap, the same toothpaste, and guess what? We probably trade the same way too. And people in pairs move in similar patterns. Again, your job is just to identify patterns so that you could trade in the market. Okay.
Thank you.
You're so welcome. So, all right. So Fibonacci, of course, was an actual person that developed a tool, but I'm not going to get on to the history. I need you to Google it. And actually, we got in the IM Master Academy. But what it does is it was a mathematical tool that was used to help determine where the market could go. Where it could go. And we do it by looking at the trend and it reversing, it changing direction. I want to find a good one. Let me see. I think I had USDJPY was a good one when I had that. Let me see. Oh, give me something with, I mean, you can use it anywhere. I just want to look something that's very pronounced. Let's look at gold. XAUUS. SD. Let's look at gold. See how gold looking. Okay. So, all right. So how you use the tool is it's really used for trend lines. Like now you saw earlier, we talked about trend lines going from the bottom to the top, and we want to see it touch in 2 or 3 points. So that's how we use it. We come here, you have it on your charts. Usually have it in MetaTrader 4, and some will say Fib or whatever the case may be. Right here, it's called Fib Retracement. So I select it, and what I'm going to do is I'm going to start at the bottom here, and I'm going to open it, and you see this dotted line in the middle. I'm going to kind of follow the trend all the way to the top, okay, to the top of this trend, and then I'm going to slide over a little bit so I can see the colors. Okay, so now I know everybody's like, man, what is this right here? Don't let it intimidate you. It's not that hard. Really, it isn't. All it is telling you that, and what we really care about is right in the middle of this right here. There's a 0.5 area and a 0.618 area here, 0.382 up here. All these are just percentages. All right, so let me tell you the philosophy behind this. The gentleman who invented this basically said, if the turning point where it does a trend reversal, we went into uptrend, but then it turns around. Depending on where this is at the very, very end, will give us kind of an idea of whether it will continue up or whether it will continue down. Here's all you really got to know. I'm telling you, if it passes this 0.5, which is the halfway point, and goes to the 618, it's going down. It's going down in a full reversal. It's going all the way back down. If it stays from the 0.05 and under, it's going to continue back up. That's it. You've now learned Fibonacci. That is it. Let me put a line through here. Okay, so at this yellow line, if this pulls back and is dancing and it makes it past this yellow line, that just means it's going to go all the way down. That's it. That's all it's going to mean, because mathematically it is stated that using this tool, that if it passes this level, that it's supposed to go further down, the equator right here. If it stays above here, it's probably going to pull back and continue up. That's Fibonacci. That's it. That's as simple as it goes. So you can use that in any direction, but that's all you really got to know. If it passes, if it stays up in this top area, it's going to continue. It's probably going to pull back and continue up. So what this is saying, if it continues up in this area, it'll probably continue in the uptrend, and you could ride it back up, probably up to this top level right here. So you have between here up to this top level. If it were to continue downward and it keeps going down, 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 when you check it and then it passes this level, then guess what? It's probably going to make it all the way back down to this bottom level. So now you'll know that you could jump in and probably ride it down to this level. That is.
Shawn, can you hear me?
Yes, go ahead, Lisa.
Can you say those numbers one more time?
0.5. You got the 0.5 level and you got the 0.618 level. That's really it. If it makes it past this halfway point to 0.5, just remember like halfway, like half of 1 is 0.5. So if it goes halfway past this halfway mark, chances are it'll continue in a full reversal. It'll continue all the way down. If it settles here and starts pushing back up, most likely it's going to continue in the trend that it was going.
Okay.
Okay. And that's how people use this tool as one of their confirmations. Now, there's a few of you who've been introduced to the auto fib. Okay. Auto fib phenomenon. That's a tool that we now have that we can add on our chart. Okay. It may seem as advanced, but it's really not advanced. It is set up on this premise. Now, let me kind of outline that premise. Basically, when you hit the auto fib, it does Fibonacci by itself. Hold on, let me make sure I check the chat here. Okay, cool. Yep, seems easy. Yes, it is. All right. Yes, Mindbender, it is the bomb. So when you hit the auto fib, what it does is it takes where the angle is, and it gives us an entry. And this is where if it passes this area, if it's up here, I'm sorry, if the auto fib will calculate if it's here, then your 0.618, your 786, and the 0 are all take profit 1, 2, and 3. That's how it calculates it. It's gonna put, let me see, let's write it. It's gonna put TP1. Okay, it's going to just place it for us. Come on, words, move. Okay, I don't want a bunch of text. Hey, stop it. All right, let's go ahead and just erase it all. Ha, there we go. So let's put the fib back. Okay, as I was saying, basically these levels right here, the 0.5, 0.618, 0.76, it's just going to, the auto fib is automatically, you're not going to see the fib retracement on your computer, but what you're going to see is it's going to show you the entry, and then it's going to show you take profit 1, 2, and 3. That's all you're going to see when you use that feature. So you don't have to use the, you don't have to see these numbers. It'll already calculate for you where your take profits can be. Okay. So most likely it would tell us already when I hit auto fib, it'll say it's either trending up. And if it's trending up, it'll give me the take profit 1, 2, and 3 going up. If it was trending down, which means it passed the 0.15 level and probably at the 0.618 level, then it'll give me a take profit 1, 2, or 3 going down in the sell. Does that make sense? Lisa, does that help? No? Yeah, maybe so. And
Yes.
your stop loss. Thank you.
Yes.
And your stop loss. So let's see it live so you guys can kind of get it. Because I know you're like, okay, Shawn, I want to understand this. Let me pull up my, stop share, pull up my chart, and then we'll see it in action. And then we'll just take some open questions. We'll just take random questions. It doesn't even have to be, let's see, anything big. Where's my Hugo's way? Hugo's. Oh, way. MT4.
Good job, Nikki.
Oh, yeah, Nikki did her thing. Hold on, guys. I'm recording, and I can't pull my broker back up. All right. We're going to work it out. I'll pause it. I'm going to figure it out, guys. Hold on. I'm going to work the system. I'm going to work it. Let's see. MT4 dashboard. Here goes. Hey. You know what? I know. Let's see. Who's on their laptop and has the I want somebody to share their MT4 with the auto fib on it, and then
I could pull it up if you want.
Yeah, can you do that? You can share screen.
One second, I'll let you know when I have it.
Cool. All right, so all right, cool. And now let's go back to what we're talking about. Anybody have any questions about anything? Anything at all? It can be open-ended, whatever. Support, resistance, your entries, anything.
I have a question.
Yes, Miss Claudia.
Yeah, when we go to also, if we put Fibonacci in our for our charts, all of those numbers are automatically there.
Yes, ma'am.
Oh.
So yes, let's pull up US 30. So okay, so
Can
US
you
30.
read me off the meeting ID?
I'm sorry.
Can you read me off the meeting ID? Do you have it?
Yeah, it's 865. Well, you don't need that. You're on Zoom, right? Or you're on your.
No,
okay.
I'm on my phone, but now I have my computer pulled up.
Okay, 181. 5867.
5867. Join.
All right. So I'm gonna use Fibonacci on US 30 real quick, so you guys can kind of see how to use it. So what I'll do is I'll come to Fib Retracement, and I'll start at the top because see the trend line starts from the top to the bottom. What I want to know is what this end piece that's turning around, this buy part, where that may be going. So I expand it down here, then I come across. All right. So now we see that it bounced up and it's still under the 0.05. So it's possible, see, this is kind of a trend line itself. It may come back to this dotted line and continue down, or it could pass the 0.5 or the 0.618 point, and then we know that it's going to head back up. And then, of course, there would be a trend line up here, a support line up here at the top to let me know how far it could go. So it could turn and continue down. We would wait a little bit, or it could end up going all the way up to here. And if it does, that's great too. Okay, so that's how I would use my Fibonacci just to do it. So that's only one part of your confirmation. You could check that to say, okay, looks like it still may continue in a downtrend. Let's look and see if it turns here. If you had the cloud on here, the Ichimoku cloud, it would probably have the cloud here, and it would probably look at bouncing off the cloud and continuing, or it would break through the cloud and go up. Okay, that's just one strategy. And there's many others too. So I will stop share, and if you can, Latia, go ahead and share yours. And then we'll check out this auto fib real quick. Okay. All right, cool. So, okay, so on her chart, over to the side, I can't really see yours. Could you stretch it out? I want to see over to the top under USD JPY what it says, trending up, trending down. You just stretch out your screen a little bit. Okay. No worries. Can't really see it. You can you see it? What does it say? It should be, I guess, trending down. No, trending up. It should say trending up because it's showing the take profits up. But basically, you're good. Yeah, very good. You can move it all the way to the right, so I can see where price is right now for me, please. Other way. Yeah, there you go. Okay, if you can, up on the top, the 1, 2, 3, 4th icon from the right on the top of your chart. Fourth, 1, 2, 3, 4. That one, hit that. There you go. Good. All right. So now, all right. So remember, I just showed Fibonacci on USD JPY. Remember, I was putting up, and I said it could go in a, it could continue in a downtrend. I don't know if you guys remember that. But here's what it did. It's showing when we showed the fib that you could go to that take profit 1, 2, or 3, and that will take you all the way to the 0.05 mark or the 0.0618. It'll go to those points if I put Fibonacci on top of this. So this does it for you. So you could just pick those 1, 2, and 3 to determine where your take profit is, versus the other one had the 0.05, the 0.618, and then you would determine your take profit in between those. This tool does it for you. So you don't have to put the Fibonacci retracement tool on it, okay? But if you don't have it, then you use Fibonacci exactly the same way. You would just use those levels. And actually, I'm sorry, that would be the 0.2 and the 0.32 is what take profit 1, 2, and 3 is. It would go all the way up to 0.05 for that for that part. So that's really it, guys. All you really need to know is if it's under, you know, a certain level, it's going to continue in the downtrend or uptrend wherever you're using it, and then if it's over the 0.5, it'll reverse, be a full reversal.
They need to know how to get it.
Well, you know, not everybody can get it. Got to be on the tizime. You got to be on the tizime to get it. Got to be on the team, and then we'll have it for you. So those who are on the team, when you're ready to use it, which if you're just in your demo and you're just starting to practice, it's not time for you to use that quite yet. I want you to definitely get some good trades in, especially off the harmonic scanner or the web analyzer, whatever it is that you like to use or whatever you've been introduced to. And then this will be a little bit, just a tad bit more advanced. It doesn't seem hard, but we want to make sure that you got the basics of putting in a trade properly, determining your take profit 1, 2, and 3, getting some profits under your belt, and then we can kind of move to the next step of using Fibonacci in there. And of course, the I Am Mastery Academy, we have several instructors that use the Fibonacci retracement in their confirmations, so you could learn from them. And I don't know if anybody on the class here, does anybody know any educators right offhand that uses Fibonacci?
Dr. Kathy.
Okay, so Dr. Kathy Kirkland uses it from time to time.
Yes.
I think Mike Miles uses it. I think Manny Canones, I think he uses, and Kevin Serrano. I think that's who really uses it. Kevin Serrano uses it.
Yeah, it's Kevin.
Is it? Okay, cool. So yeah, so those are the educators that specialize using Fibonacci so that you could see it over and over again on how they use support, resistance, and that to confirm their trade so they can make big, big profits, guys. Okay? So with that, you can stop sharing the screen, Ms. Latia. Thank you so much.
All right, stop sharing.
And you can mute your phone so there's not an echo. So great. So with that, ladies and gentlemen, does anybody have any questions about anything? It doesn't have to be about Fibonacci support resistance. It can be about anything. Does anybody have any specific questions about something they would like to know? Maybe something that's maybe slowing their trade down a little bit. We want to make sure that this is the space that you can ask those questions, because we are learning from each other, so that we can, you know, win at this thing.
I have a question. I have two questions. The first one is, with my demo account, will that show up in my accounts in Hugo's way?
will that
The demo
tool,
account.
oh, will the demo account show up in Hugo's Way? Yes. Yes.
It should. Okay.
Mm-hmm.
So I may need your assistance because mine isn't. I've deleted, restarted. So we can kind of take that offline.
Gotcha. Not a problem. What's your
And
second question?
my second question is, what exactly is take profits 1, 2, and 3?
Take profit is, well, I tell people it's like your GPS, okay? When you get in your car, you got to put an end address that shows where you're going. And when you get to that end address, that's your destination. Your take profit is the price that's going to be your end address. When the candles go to that price and crosses over that, then it'll close that trade, and whatever money that you made, whether it's $100, $1,000, $10,000, as soon as it closes, it's going to put that money in your broker account. So you get to determine what your destination is going to be. That's what the take profit 1, 2, and 3. Those are suggestions as far as where you can make profit.
Okay, and I heard you mention as you were training that once you got to the ceiling, you could go ahead and get out and watch to see if it busts through the ceiling or not.
Right.
And get back in. How does that work? I mean, are you taking your money out then putting it back in at a higher price, or what?
Yeah, you can. Yeah, what you're looking for is in that example of the destination to take profit, I would maybe put in a take profit. Let's say we were looking at that same example. Actually, let me pull it up so we can visualize that. All right, let me mark this up. Oh, and an easy way, as I tell people to mark up your chart, if you're kind of confused and you say, man, I don't know how to mark up your chart, you go up here and you can do it in your MetaTrader 4, you change your candles, you can change it to a line and you can see the edges better. You see the points better. And so from there, I go ahead and mark it. At these certain points. Maybe I'll put it there. Okay. So I hope you guys can see that there's a couple points like here, I'm kind of putting it, maybe over here, I kind of see these points. Down here, here's a point. Here's kind of a point. The top of this is a point. Then down here, I have a couple points here. Down here, I have this point. And can anybody tell me, well, let's see, I'll just mark it. Okay. Here's what I meant to do. I meant to put the trend line on top, not on the bottom. And I kind of went through because this one went a little higher, but I have a couple points like here, kind of here. This one broke through, of course, here. And so once it breaks this area, this is a downtrend. Once it turned and broke this point, this is a possible entry. And this is where the take profits were. Even though I don't have Fibonacci on it, this is kind of where a take profit 1 could be, take profit 2, take profit 3 could possibly be if you want to, or it could be, less than that. But breaking through the ceiling is merely, as I told you, you trade between the zones. So I want to be safe. I don't want to, think, let me move this trend line. I don't want to imagine, I don't want to jump in this trade and then I get halfway up thinking it's going to go farther. And what happens, I get right here and it turns opposite direction on me. Okay. I want to go to where I have no resistance in between these zones. So I'm going to ride it up here and then I'll get out of the trade. I'll switch back to candles. I want to get out of the trade before it gets to this area, wait for it to see, is it going to turn back down or whether it goes through? If it goes through, then I'll jump back in and I'll do another trade for however many pips. You can do for 10, 20, 30, whatever the space is in between, I want to do it in between there. And then I'm going to wait here to see, is it going to break through or is it going to come down? Let's look at this whole area here. This is exactly what it did. Oop, 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 oop. Okay. So let's say we saw it here. It made what we call a doji candle, and you'll learn this as you do more trading. But when you see this type of candle right here that looks like a little top, that's a clue that it's changing direction. Right there. Oops, take that out. So then a big candle came. This is called an embellishing candle. It embellishes these candles. It's bigger than all these 3 candles here. So this is a clue like, hey, there's some buyers that have some momentum, some power here. So most likely it's going to continue up. So after you see this green candle, I wouldn't get in on this red. I'd get in on this green. So this green candle would be my entry candle. Okay, so this candle right here would be my entry candle. And then from there, I'm going to ride it up. But remember, like I said, I don't want to try to go all the way up here. I want to make it somewhere in between, maybe a few pips underneath. So maybe the farthest I may go could be, just to be safe, let's say I go here. Let me change that color to green, okay? So I can trade, I can get in and go anywhere between here. But once I get here, I'm going to get a little scared because it could turn on me, which it did. But I want to get out. I want to take my money and get out and then wait to see what happens at this level. It came up here and it didn't break through. Instead, it made a red candle and then it continued downward. So once it did that, I would wait to get back in. Now, here's another question. When do I get back in? I want, oops. Stop making duplicates. Okay. I want to get in when a red candle goes past this tall green one. See this tall green? All this right here, it could have came right here and turned back up and continued up. But instead, once it broke the low of this big candle, because that candle was pretty strong, I want to know, you know, have a feeling like, hey, is this going to go the other direction? I would get in once it breaks past this. So I might get in on this candle or this candle. Let's play it safe. Let's play it like a beginner. Let's say just to be safe, I would get in on maybe this little candle there. Oops. And then I could ride that back down. Okay. So that's kind of how what I'm talking about. You want to wait. And let me see how many pips. Let's say we got in here and I just wrote it up to this green. That's 69 pips. That could have been $69. It could have been $690. Whatever, you know, your account can handle. And then, oops, I didn't mean to get rid of that line. Let me put that line back. Okay. And then I could have waited for it to turn around, get back in here, ride this back down. And let's just say I don't wait all the way there, just right here, 76 pips. And I'm not even all the way down to the bottom. But if I ride it there, I could have made $600 one way and another $700 the other way, just by being patient and trading in between my boundaries and not even going all the way to the top, not even pressing my luck. I'm just being very conservative. I'm just getting a little bit. Hey, I rolled this up. I waited till this came back. I wasn't even sure. This thing could have turned back up, but instead I want to be extra sure. So it broke this level of this long candle. It broke this little area and came down, and I made sure that it was going down. So now I get in way down here, ride it down just a little bit. I'm not trying to be greedy. I'm not trying to run all the way down here to the bottom. I just want a good area of it. But that's still a possible $700 right there. And then look what it did. We come over here, and we would think that maybe it's going to turn back up, but we wait. Because remember, I didn't ride it all the way down here. I'm going to wait and see what happens. So I wait. It bounced right here, but then it broke through on this candle. Broke through, came around. It retested this area. Okay, it came back up, and it actually could have turned, but we waited. It came back again, made this big long candle. I probably got scared. I probably would have. I'd been like, ooh, I don't know what this is going to do. I don't know if it's going to go down, but I would have probably committed to the trade. That's another thing. You got to commit to the trade. I would have stayed in. This probably would have got me out, this long green candle, because I probably would have had my stop loss just a little bit above that, and it probably could have got me out. but that's okay. If it got me out, okay, cool. I lost a little bit of money. I probably made $700. This would have knocked me out. I probably would have lost maybe 50, 60 bucks. Not a big deal. Once I see this coming in, going down and continuing the downtrend, I could have got back in and got my money back. Probably not on this big long candle, because this was probably news, because that's the only way that these big long candles come, is some news comes out. I probably wouldn't have been lucky enough to catch that, but I would have been lucky enough to catch this on a downtrend and probably got in somewhere over here, rode it back down to this level. And that could have been an additional, let's see, I'll just take it from this candle here. I don't need to go all the way down. I'll just go 70 pips. So that could have been another $700 move right there, all because I'm being patient and I'm waiting to see what the market is bringing to me. But I'm still just trading between levels. And again, I haven't used any indicators. You don't see me using RSI, stochastic, or anything. I'm just reading the candles. I'm just looking at the different levels and just determining, you know, what the market is giving me. And I want you to pay attention. That's what I keep saying. I wait for the market to give me something. I'm not trying to put my will on the market. I'm not trying to read what it should do. I'm waiting to see what it hands me, okay? And then my trading style. Most likely, you're not going to catch this long candle. This is beautiful. We would love to catch it, but most likely I'd have got scared once I saw this green candle. Most of us would have got out. And that's what that candle is designed to do. It would have got most of us scared, and we would have got out. And then we would have seen this big, long red one. And a lot of people would have jumped in because of the news. And yes, they would have made some money. But for me, I probably wouldn't have caught that.
It was from the news this morning.
There you go. See? And then from there, I would just wait till the market settles down. This is an hour candle. So an hour after this, it still continued in a downtrend. So now I would have felt comfortable. Like, okay, the news shook it up, but now it's back to normal. It's still going in a downtrend. Now I'll get in, I'll catch this part. Okay, you're not going to catch everything. And it's not your job to catch everything. You just want to look for the best trade that you're comfortable with, that you've done your confirmations with. You do your confirmations, and then you get in the trade and you commit to the trade. And you don't have to get the whole, you know, this is what, 800 pips? I mean, 70, 80 pips? I don't need to get the whole 70. Just give me 50. That's still $500, $5,000, $50,000. Just depends on what your lot size is and how big your account is. But even if it's just $50, that's great. You're making money. You're in profit mode.
How do you make profit off of a downtrend? That's kind of a different, I guess, different concept. Not different concept for, I guess, maybe normal for this, but different concept when you think about making money.
Because unlike stocks, you're going from a cheap price to an expensive price, and then, of course, you sell it. Here, it's about positioning. You're just positioning from point A to point B. So that's the biggest thing I want you to know, is that point A could start up here, and point B could be down here because you do your analysis. You're going to make money because one currency is weaker and another one is stronger, and all you're doing is just kind of riding that wave. I mean, that's a great question, because I wrestled with that in the beginning too, but just understand in Forex that it's about position and not about stock prices. It's about one currency started here, and because one is weak, it's starting to go in a sell. And then I wanted to get to this point. Once I can determine it goes from A to this point of B, I just make money because it's going that direction. And if it turns right around and goes back up, I started another A and I determine another B, which could be up in an uptrend. And then I'm going to make money that way. So that's the beauty of why people prefer Forex versus stock market.
Okay. Thank you.
You're welcome. I hope that answered. I know that wasn't the technical answer. That's probably going to come in the academy more so, but that's kind of the bottom answer. Sometimes you don't need to know every little detail why it works. Just need to know how it works.
Right. I mean, it answered the question, but I guess would that translate to when you're putting in the trade, like having the currency flip-flopped? Would you switch the currency based on I guess the upward or the downward trend?
Well, the trend, depending on what you're following, will determine whether you push a sell or whether you push a buy. And that's what tells the broker what direction you want to go from that A to B. Okay? You put the price and the entry price, or when you do a market execution, it's going to put the price right where you're at. And then you get to determine, just like your GPS, whether you're going to go to mama's house or whether you're going to your uncle's house. Okay? That's whether it's going to be a sell or buy. Okay?
Okay.
And so when you push the sell, which is what color, if you look at your phone, what color is the sell button?
Green. Red.
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 So what color candles are you looking for then?
Okay, red.
Exactly. And then when you want to do a buy, well, that color is, well, it's blue, but you know, you're looking for the green candle. So that's how you tell what direction you're going to go.
Understood. Thank you.
Oh, you're so welcome. Any other questions? These are some great questions, guys. You guys are like killing it tonight. Don't be shy. Don't be shy. Okay. Well, any comments? Was this a good train? Did you guys get something from this?
You're always thorough.
Very much so.
Very, very good. I appreciate
You know,
it.
something that I've added, maybe because I've just been like a neurotic with this theme the last few weeks, but what I noticed is that if you're looking at the candle move while your money is moving, based on if the candle's going up or down, you would see your money moving in that same direction. It's like if anyone like was looking at their phone and they were getting paranoid or, you know, or excited at what they was seeing and they wanted to know what the market was doing at that exact time, they can always, you know, pull up this MT4 tradingview.com and actually look at the candle and see how it's moving. And on that exact minute, you know, like if you're doing 1 minute, 5 minute, 15 minute, hour, whatever.
Oh. Okay. Cool. Well, all right.
Awesome training. Awesome training.
Thank you, Ms. Betty. I appreciate you.
You're welcome.
All right. All right. Well, if there's no other questions, guys, thank you.
One more.
Oh, go ahead. Who's
So
this?
it's Yolanda.
Hey, Yolanda.
So it's a basic question. You kept saying US 30. How do you get to US 30?
How do I get to US 30?
Yeah, I know the different trades, but I'm not aware of how you get to US 30.
Well, you definitely have to have a broker that has a market for indices, okay, that allows indices on their platform. So Hugo's Way is one of them. I think there's a couple others. Trader's Way does have indices in Bitcoin too, but they're separate. Like you got to make a separate account for those. They don't have it all lumped together like Hugo's Way. So a lot of people use Hugo's Way because it's all lumped together. So you can look at your menu and add indices, stocks, this, that, into your platform. So that's one. And I don't know, you guys are on, is there any other brokers that use indices and gold and Bitcoin all together like Hugo's Way?
I'm not sure, but only thing I found out is you don't want to trade them all together when you have a live account.
Right. Yes, you do not want to trade, you know, have one trade US 30, another one Bitcoin, another, you know, what I definitely suggest is do one trade at a time. Do one watch, because those things move. And if you put another trade in, it'll affect the money on that trade. It could, especially how fast it moves and the points that it moves. It could put your percentage, your trading percentage in jeopardy, where it forces the broker to close your trade. And that number is 200%. You want to have margin percent in the bottom corner. When you see those numbers, you always want to try to keep your margin percent above 200.
Okay.
Okay. Awesome questions. Awesome. All right, all right. Well, it's 10:01 Eastern time. If nobody has any other questions, again, it's an honor and a pleasure that you guys are on. I love that you guys are on. I love the energy, the questions, everything. Thank you so much. Again, if you are a guest, we welcome you, and thank you for being on tonight. Please get back with the person that showed you this information. If there's something, if you feel that you got something, I'm not an educator like our I Am Mastery educators that do such a better job, but you're going to learn so much more of this that you're going to have live and recorded, so you can actually watch them do the trades and break it down even further from what I'm doing. This is just a taste, a snippet of what you can get. And we just want to keep brushing up our skills. Again, we have several people on the team that are making great money now, and that's because we've just been speaking into an existence. We've been practicing, we've been homing in on our skills and staying in our academy. Thank you, Gene. I appreciate you being on. And so we just want you guys to continue to plug in and join the team, join whoever invited you, and let's rally around you and make sure you're successful at this trading. So with that being said, guys, I'm going to go ahead and end the call. Thank you. And I'll see you next week.
Good night, you guys.
Good night. Good night, everybody.
Good night.
Night.
Good night.